Okay. Just waiting for the, it's redirecting. Okay, I think we might be good. Okay, all right, welcome to Thursday Night Shift. Thanks for a couple of minutes late. So I am so thankful that everybody's here. We have everybody's lines muted this time. We're trying something new because we are going to have a lot of different guest speakers this year. We're super excited about it. So just, it'll help keep the background noise quiet. Utilize the chat if you have any questions. We will try to go through those towards the end to help hopefully get them all answered. If not, maybe we can submit some questions to Michelle later. But really quick, I'm going to just do a very fast plug because I got my things in this today, the collection, the All Is Well wax collection. If you have not purchased these, you guys, and you can, I mean, don't break the bank or not feed your children if you can't get them. But if you can get them, you guys, it's $25. Consultants can buy them early. I am obsessed with this collection. I love every single one of these, and they're going into my club. So really quick, I figured if you like Atlantic air, you're going to love the blue one. It's almost like you were at the beach, just that salty air mixed with Atlantic air. It's wonderful. This one reminds me of like orange dreamsicle mixed with some like hint of vanilla, a very, very nice scent. So that's the orange one. I don't know any of the names. I'm just going to by color. The green one, I felt like I was at a spa or sitting in a bath. Like, I don't know what this is. Clean laundry, soaking in a tub with some great bath salts at the spa, maybe. So good. Very surprised by this one. This one's your fruity-ish one. So it's kind of like a nice blend of clean and fruit combined together. I really like it. And then last but not least is the purple one, which it's got lavender in it mixed with something else. And it's a really nice blend, like a great spa scent. So order these little tiny little felts. They're super thin on Amazon. 3 cubes will get you like 100-something samples. They're flat to mail. It doesn't cost you hardly anything, but it's getting those fragrances under their noses. So I just wanted to really quick plug because mine just arrived, and we are not going to waste any more time on wax talk. We're going to get straight into tax talk with my favorite CPA in the whole wide world. She's been my personal one for years and years and years. Michelle Graham, who just recently got married, Michelle Hildebrand. So take it away, Michelle. Thank you so much for being here and volunteering your time to help all of us make some sense out of our taxes.
Oh, thank you so much for having me. That was a really sweet introduction. So I am going to, are you going to share the screen, Heather, or should I? I don't know what you're saying.
I think you're sharing already because I see
Okay,
Zoom.
good.
I see your screen.
Oh, okay, good.
Oh wait, no, we're viewing Sherry's screen for some reason. Not sure. Hold on just a second. That's sharing. Not good. Okay, I'm going to click share screen and let you try it again, Michelle.
Okay.
There you are.
All right. All right. Can
Here
you
you go.
see
Perfect.
the PowerPoint? We're good. So I was here last year, and I am very grateful for Heather inviting me back. That means that I didn't completely confuse you guys. I'm a certified public accountant. I'm licensed in Texas, but I can file, and I do file tax returns all across the country. I'm not just like, a CPA. Everyone kind of thinks taxes, fixing messes from previous years. But what I'm really passionate about, because the place where I come from is small businesses, helping small businesses grow. And I think the most important part about that is you need to have an understanding of what's going on behind the scenes. You need to take ownership of your numbers. So I want to give you some like little tips and tricks to at least like trudge through this tax season and wrap up 2021 so that you can get a good idea of what to focus on for this coming year. So the importance of tracking your business. You really need to know your numbers. You need to have an understanding of where you stand at all times, not just from a tax perspective and what deductions you should be and receipts you should be keeping, but also, at some point when you get a full grasp on everything, then you should be able to track it every month, to kind of see the areas in which you're growing in, your average number of sales per customer. That's a really great key performance indicator. The amount of revenue per event that you host, or the amount of money that you put into an event and like the return on it. So these are all things that we can track with good accounting practices. I want to just kind of jump into your tax return, because I know that that's probably what everyone has on their mind. The 1099 NECs, that is what you get if you make over $600 in commissions. So, and you probably have seen these forms before. It used to be 1099 miscellaneouses, but it changed last year. So what this is indicating is that's the amount of money that you have to put on your return for this business that you have, for this business activity. The problem with that is that if you were just to plunk this number on the Schedule C of your 1040 tax return, that if you don't have any expenses that are offsetting it, you're getting hit with self-employment tax at 15.3% for whatever you can't eliminate, in addition to federal income tax, which if you already have, if you have another W-2 salary, or if you have your husband or your wife in your household is still working, then that's bumping you up in your tax bracket. So I want to maybe outline, I guess, what you can look at, some deductions that you can take, and what you can expect to see. So a profit and loss statement is the same thing as an income statement. What it's going to start with, and this is the simple version. Last year, I think I immediately jumped into, the idea of the commission that you get, but then also if you were to be selling product on your own. I'm going to get to that in the next slide. But in this one, this is the simple look of it. And the formula is the total revenue that you earned, which is going to be the amount that's reported on the 1099 NEC, less just like general operating expenses that you have. And I've got a great list that we can refer to a couple slides down. It includes, home office stuff and mileage and supplies, postage, all those things. So that's going to come to your net income number, and the net income number is ultimately what Uncle Sam is going to say, that's your revenue from this, and we're going to apply some tax to it. So the next version that I'm going to show you is if you have kind of gotten to the point in which you're saying, all right, well, I'm selling through the website, I'm selling, through the catalog per se, but I'm also purchasing product myself. And, I've got a showroom, I've got people, I host my own events, or people come by and they place direct orders through me. So how that makes things more complicated for you is that, one, the IRS has started, if you have a business account that's getting, money through Zelle and Cash Apps, things like that, they're going to start sending out 1099-Ks. So if you're processing credit cards, if you're using Stripe, Square, you've already seen these. But that's basically showing any kind of any money that's coming in from outside places that you're accepting as a form of payment. So you have your 1099 NEC from Scentsy showing the commission that you earned. And then you're also going to have the revenue that you receive from all these other outside sources whenever people will pay you for products outside of that system. So we need to add in some additional expenses because you paid for that product that you had to give them. So that's where the cost of goods sold comes into play that you see in this little section. So the way that you need to kind of set this up, that the problem with this is that you could say, hey, they're running a sweet deal, so I'm going to buy like $10,000 worth of merchandise. The problem is that you have to go back and you have to count what you actually did sell in 2021 versus what you still have on hand. So the only way that you could write off the entire $10,000 worth of product that you bought was that if you in fact sold all of it in that tax year. You can only expense or write off product that you bought if it's product that you sold. And if you didn't sell it, it sits in inventory, and eventually, presumably the next year, when you do sell it, then you can write it off then. So that's why it gets a little bit more complicated if you are holding on to inventory, and you need to find a good way to track that. And I think that you can use a spreadsheet to track it. I know that there's programs and systems, but I think that you can probably do a pretty good job if you just track it in a spreadsheet. So And then of course, after your cost of goods sold is when you have your SG&A expenses, the same ones that we're going to go over in a little bit: sales, general, and administrative expenses, which are basically just like your office expenses for the business. So I want to drill into real quick the cost of goods sold and inventory issue, because this can get really confusing. So the idea is that you have a beginning balance of inventory each year. So say you're starting fresh and new. This is this year one balance. I'm brand new. I just walked in here. So I purchased $147 worth of items, but I only sold $35 worth of those. And keep in mind too, that it's the cost of the product, not the value in which you sell it at. So you can't write up the cost of your inventory. That's a big IRS and generally accepted accounting principles rule. So your inventory value includes the cost of the product that you bought it for. And you can also include if there's like shipping and sales tax included in there. So you don't need to make your life more complicated by splitting those things out. So your beginning balance of inventory plus the purchases that you made during the year, less what you ended up with your ending value of inventory, because a lot of times that's like the easiest thing to reference. Like, okay, well, when the dust clears, I know I've got 10 of this and 5 of this. So that's going to be my inventory. At least I know that amount. I know what I bought because it's on my credit card statement. I know what I ended up with. So you're able to back into a cost of goods sold number, and cost of goods sold is the amount that you can expense on your tax return. This $112 that I'm left with at the end of the year, that just rolls into the next year, and then we add in the purchases, we subtract the sales, and we come up with our ending inventory for the next year. So that is, it's a lot, I'm sorry. But it's just important that we get this right, because I think a lot of people think that they immediately are able to take this huge expense and write off, but that is going to open you up to some scrutiny with the IRS if it shows that you bought more product than you actually sold. So here are all the expenses, all the office expenses that you can write off, with a little bit of information on each of those. So, and hopefully this is like jogging some, ringing some bells with you on some things that you've incurred that maybe you forgot about. So bank fees, this is going to include merchant services, credit card fees, if you're using any of those. Credit card fees, of course, and be sure and kind of keep an eye on that, because you'd be surprised, these merchant service processors, they tend to kind of slip in some extra fees here and there. Software expense, if you're using anything to track all of this, dues and memberships. This also would include too, like some software apps that you might be using, apps on your phone. Equipment repairs. So this is going to be anything, here and there that you're doing, or small equipment that you're buying that's like maybe less than $1,000. If it's a larger piece of equipment, like you bought yourself a new computer, then it needs to go elsewhere. And we'll talk about that later. Telephone, the general rule is that you probably are not safe in just like throwing your entire phone bill onto your tax return for this business. You need to have a reasonable percentage of what you're probably using for business with your phone. Gifts, you're limited to $25 per client. So keep that in mind when you're doing giveaways. The other thing that you could be doing too, so if you bought product, kind of backing up into our cost of goods sold, if you bought product and you take it out of inventory because you want to give it as a sample, then we're going to expense it down here, and we're going to extract that cost and then move it in this part of the return, and basically kind of call it like advertising and promotions. Those are the samples that you're giving out. Interest expense you can write off, but that's only related to business debt that you have. Office supplies, obviously. Home office expense. I've got like a fun little spreadsheet at the end of this that I'll show you, where you can allocate all kinds of things. So rent, if you're renting, your mortgage interest only, not principal, property taxes, insurance, homeowners association dues, your cleaning lady, your alarm system, all of your utilities. If you did a home repair, you can allocate that Your home office square footage divided by your total home square footage is the percentage that you can apply to all of those overall home expenses that you have to basically, kind of show the space and the cost of running that home office. Any kind of accounting fees, contract labor, if you're lucky enough to have an assistant, if you pay anyone for services in either cash or check or cash app for over $600, then you need to issue them a 1099. Postage, printing, advertisement, auto expenses, which we're going to get into that in a second because there's like some little tips and tricks and rules with that. Travel. Make sure if you're attending a conference, for example, obviously you're able to write off your lodging, your meals, your airfare. If it's a cruise or if it's international, be sure and check with your accounting person because there's some like minimum work requirements that you have to hit against it. They're not nearly as generous in taking those expenses. So they changed. And in an attempt to revitalize the restaurant industry, at the end of last year, they changed it. So if you ate a meal, a working meal in which you're discussing work with someone at a restaurant, then you can deduct 100% of that, which before it was only 50%. So be sure and differentiate if you're writing off meals. You can't write off any entertainment still. That changed in 2018. But you can write off meals that you take in a restaurant 100%, and then just keep to the side any other takeout meals, or I guess if you're going to an event or a party and you're bringing some food, that would be only a 50% expense right there. Here's some auto expense rules for you. So it gets a little tricky, and I think in some of these areas people tend to get very aggressive. I think that you all obviously should use your discretion. The general rule with the IRS is that if you're showing a big loss for a company or a business for the last 3 out of 5 years, then they're going to start to say like, well, maybe this really is like a hobby and not necessarily a business. And they're going to look at that. But if you have quite a bit of income coming off of the business, some people, they might purchase a vehicle and apply a percentage of that vehicle to being a business asset. So in 2021 and before, you could write off 100% of bonus depreciation for a vehicle if it was over 6,000 pounds. Starting in 2022, it drops down to 80%, but they're still arguing in Congress on what 2022 is really going to look like from a tax perspective. So we're all kind of up in the air on whether or not bonus depreciation might still be generous. So you can physically put your vehicle on the company's books and take a big expense there if you can justify it. But if you can't really justify doing something like that, you can at least write off the mileage that you incurred. So for 2021, it was 56 cents a mile is the standard mileage rate. And you do have to have some documentation. They expect you to have a mileage log, and there's some apps out there like Mileage IQ. I think QuickBooks has a part of their app that tracks this as well. That's, you swipe one way every time you get in the car, it knows that you're driving somewhere. You say it's business or it's personal. So you do need to have documentation. If you don't have the best log out there, the IRS has, they'll look for a reasonableness test, obviously with the amount of business that you're doing. And if you have like maybe an oil mileage from an oil change reading at the beginning of the year and then one towards the end of the year, we can reasonably decide what that's going to be, but it's always best to have a log. And the rule is that you kind of throw the mileage in one bucket, and then in another bucket, you put like repairs and maintenance, new tires, oil changes, insurance, fuel. That goes in another bucket. Whichever is greater is the one that you use. So just kind of have, I would say like 80% of the time, I always see mileage winning. For leased vehicles, the general rule is that it's like either or. You can either take the cost of the lease or the mileage, but there's also some exceptions to that. So just kind of keep all those things in mind. And, you know, if the more complicated you get, that's when it always ends up being better to try to consult with a professional to help them, you know, with the judgment on which of these you should take. And all of these are going to be applied to the percentage that you're using your vehicle for business. Home office expense. This is the little template that I like to use. This shows all these different, you know, components of your house that are allocated to the home office area right here. I know that some of you might even have dedicated display or storage space. So you can add that square footage in there as well. If there's any direct expenses that you made to that space, like, you know, say you got some furniture or, you know, you painted the office, you put new floors in the office, then those are considered to be direct expenses that you can take 100% on your home office expense. All of these are indirect expenses, like just things going on in your general household that you can apply to the home office space. So some things that you can't write off, just for you know, some people get very excited and very aggressive. I saw someone today trying to write off like all kinds of like political campaign donations. You can't do that. Don't do that. But also entertainment. You know, before 2018, everyone, you know, thought that they at least could get 50% credit for, you know, sporting tickets and all kinds of things. And they did away with that. So, you know, weigh that when it comes to the cost benefit of whether or not you're going to provide that to your customers. Meals that are part of the entertainment package, they said that if they're included in that, like a box suite, that you can't write off any of that. If you have business debt and you're making monthly payments, you can only write off the interest portion of that. You cannot write off the principal. The taxes that you owe, that's like an owner personal expense. So, you know, obviously you can't just kind of go around in a circle. Like I paid $10,000 in taxes for last year, I'm going to add it as an expense this year. It doesn't work that way. And then payments to yourself, they're not expenses unless, you know, you're actually issuing yourself a W-2 salary, and then it's having to go elsewhere on your personal return anyways. So you just kind of created a big administrative nightmare for yourself. So those are all the things that you can and cannot write off. And I want to circle back to the self-employment tax issue, because I think that this is one of the biggest like surprises for people whenever they get into a small business and they start seeing it make a lot of money. And then they do their tax return and be like, it seems like 30% of my income from this business got taken away in taxes. And what you're realizing is that it's the self-employment tax component. When you're on the Schedule C of your personal return, because you're reporting a 1099 NEC that you received, the government treats that as a small business and they say, hey, just kind of like as someone who's getting a W-2 salary, the company is paying Social Security and Medicare on your behalf for that salary that they're paying you. And then you're matching it and withholding from your check Social Security and Medicare taxes. Well, you combine the employer and employee portion, and that's 15.3%. It's self-employment tax, and they hit you with it on whatever your net profit is for the business. So it seems a little unfair, because at the end of the day, you might show that you made, you know, $25,000. And did you necessarily put $25,000 in your pocket? Probably not, because you had to reinvest it in the business. So because of all of that, there are things whenever you start, and I know that some of you have different structures because of this, but when your business starts growing, you need to start evaluating whether or not you want to get a slightly more complicated structure. You know, a lot of times that entails forming an LLC, electing S Corp tax status, paying yourself a W-2 salary, but only having to pay self-employment tax on the W-2 salary, and then not having to pay it on the rest of the income for the business. So, but you know, at that point, you make yourself a lot more complicated, and it can be more expensive to have to run that kind of a system, I guess, because you're having to process payroll and manage more things. So I generally think that unless you're consistently netting $10,000 to $15,000 a year, I don't think it's like advantageous to try to go through all that administrative hassle, but it's definitely something to keep in mind if you keep looking at your return year after year and you're like, where's all this money? Where are all these taxes coming from? Because that's going to be the answer. And then if you do go down that path of trying to get a more complicated structure in place, like the LLC, and don't be tricked by like LegalZoom and a lot of these services that you might Google, because they're going to sell you like a $1,400 package of things that you don't need, operating agreements and stuff like that. So just be kind of cautious about that, and maybe, use some good resources, do some research, and a lot of that stuff you might even be able to execute on your own. So that's it. I'm sorry that if I gave you a tax headache.
I was not confused whatsoever. And I am so confused by tax talk. So the fact that I was like understanding what you're saying, I think I'm getting better every single year. We did have a couple of questions in the chat, so I'm going to start back up to the top. What about a tablet repair charge if my tablet is used for my business?
Oh, okay, yes. So the repair charge we'll put under repairs and maintenance, because that's a separate line on the tax return. If you bought a whole new tablet though, then that is one of those assets that I say, you can write off almost all of it, if not all of it, under Section 179 or bonus depreciation. So you can you have to present it as an asset of the business, but you can expense it out that year. It's just, I probably explained it. I made it really complicated, but yes, you can write it off.
Yeah, good. Okay.
Yeah.
And then we do have a $10 fee, our web hosting that gives us our website to shop. So she's asking, what about web hosting expenses?
Yeah, absolutely. Yeah. All of those I would put it in probably dues and subscriptions.
Okay. What about being taxed from Venmo, PayPal, etc., receiving a 1099? Maybe I don't understand it properly, but we are already being charged tax for items people are paying us for. And will we get taxed on that too? Is that an expense? Okay. I do know Scentsy Corporate collects the sales tax for us. We don't do that as an independent consultant.
Yeah. So maybe, I think these are all maybe several different issues.
Oh, okay, good. Because I didn't understand that.
So the sales tax, the sales tax part of that, if you're just completely operating through Scentsy, they're going to take care of that for you. That's not going to be included on your 1099 NEC. If you were to accept you're selling product on your own, and you have already taken the next steps in making your life more complicated because you decided, I'm going to be selling a lot of this product, and I'm going to be collecting sales tax, and then I'm going to be remitting sales tax to the proper jurisdiction, monthly, quarterly, whatever, then the gross amount, which would include the sales tax, would show up in a 1099K that you would get from like Square, Stripe, or Venmo. Or I don't know if Venmo is doing it just yet. I know that they're threatening to, and PayPal, I know it's kind of hit or miss. But if you were to get a 1099K for any of that, it is going to include the gross amount, which would include sales tax that you collected. On your tax return, you don't include the sales tax that you collected because it's a pass-through. It's just washing in and washing back out. But you're proving it back up on your return because you're able to show the sales tax then going out when you pay it. So if you have the proper documentation, you're good. You're fine.
That's good. Can I add my Scentsy 1099 with my personal income, or do I need to file for personal and business separately?
No. So you're putting the Scentsy income, you're putting it into your personal return, and it's going on Form Schedule C. So you don't need to file a separate return. It's all lumping in together. So if you had some income on the Scentsy side, but you over withheld federal income taxes from like your day job or something like that, then that day job, the W-2 taxes that you already withheld, can offset some taxes that might increase because of your Scentsy income.
Awesome. So back to device repair can be deducted from your taxes. Could a phone be deducted as well if it costs less than $1,000, so long as it is a device you use to work?
So the phone gets a little tricky just because that has been a hot topic with the IRS. I think that you probably, I would take a percentage of not only the monthly phone charge, but the actual cost of the equipment. So and I hope I didn't confuse people. You can deduct equipment or things that are above $1,000. It's just you're going to be calling it something else on your return. You're going to need to include a depreciation schedule with your Schedule C because you're showing it as a depreciable item and not just, something that like a consumable that I'm just going to use up.
That makes sense. So let's say I have a personal phone here and I go buy a second phone that's strictly for business. I could do nothing on personal, but 100% because I have a separate account.
Yes. Yeah,
okay.
yeah. But if
Otherwise, if I'm doing like 50-50, I'm like, I better write off 50% of my phone bill and me buying the item because I don't use it all the time only for work.
Yeah, so in a court case several years ago, the IRS said that their expectation is that a taxpayer would go through and itemize every single one of their bills to break out business and personal, which, I mean, that just sounds very unrealistic.
100%.
That's why I'm just saying, just like come up with a reasonable percentage.
Yeah. The whole gas thing is a little confusing. Terry's asking, I keep track of my miles when I am delivering an order or meeting with the team member, but I was told that was not a valid way to track your mileage. I think that is, I mean,
that should be the only, it gets more complicated and so if you had like a normal commute during the day, and I think that this would probably more so apply to someone who is like I remember, for example, that I had like a home office when I was an auditor. And so I had like my normal daily commute from my house to my home office. But if I drove to a client site that was further away, I couldn't deduct all the miles from my home to the client. I had to back out my normal commute miles. So that could be where that confusion came from. But definitely if it's for deliveries, then I would think that you should be able to do 100% of those miles.
How do you account for product that they have purchased and it's discontinued in your inventory? Is it still considered the same?
Yeah, so okay, two ways. If it's discontinued and you're like, well, this is obsolete, or if you have like damaged items, right? Then in the year in which you determine that like, hey, I can't sell this is worth nothing, then you can write off your cost, and that's going to be, like obsolete inventory adjustment that you're doing. That's going to be expense. Let's write it off. Let's get it out of there, right? If it's something that's discontinued, I mean, assuming that you're still, the cost isn't going to say that the value to you, what you paid for it, isn't going to change. So you don't need to write it down that way. If you're still able to sell it now, perhaps you might sell it for less than what you paid for it. That stinks, but you can still write off your cost. So there, at least you're getting credit for it.
Awesome. How do we pay towards our taxes? She's a little confused about that.
Yes. Okay. So that's a really good question. If you do find when you're doing your business return that you owe taxes because of your Scentsy production, then the IRS is going to want you to start making quarterly estimated tax payments. And it's as simple as you can go on the IRS website. It's irs.gov/directpay or payments is the website. They actually have a really good, they revamped their individual like accounts. So they have an ID me biometric screening and all kinds. If you go through the process, and it's going to have a lot of tax forms on there that you're going to need access to, like advanced child tax credits and the third economic recovery stimulus. So all those are on that portal. But anyway, so you can use that portal, and what you're going to want to do is if you're on an estimated tax, a quarterly estimated tax payment schedule, you're going to need to go log in and make those payments. In general, the IRS just expects you to pay into the system at least 90% of what you're going to owe when you do your tax return. So by January 15th of 2023, I need to make sure that through my regular job withholdings, through my quarterly estimated tax payments, and anything else that I might send in, that I have met that burden, or else I will get some small penalties. Typically it's like $100 or less. So I wouldn't like beat yourself up over it. But it is a good, like, out of sight, out of mind. It is like a nice thing to do. There's also the installment method. If you can do an installment plan So if you do your return and you decide you're like, oh my, I wasn't expecting that, you can elect to pay over 72 months. So, and as long as your balance due is under 25,000, they automatically accept your payment plan. They charge a little bit of interest until you pay the balance off, but at least, that's an option that you have at your disposal too.
That was a great question. And next one is, as a franchise business owner, will having a Scentsy income complicate things?
I mean, it's going to be, and I don't know how the franchise is reported. If it's on, I've got like a guest here.
Oh, that's all right.
Go ask Dad about these things. So,
We all have that happening in our house one way or the other. It's totally fine.
you can't write off your toddler. So yeah, it's just going to be one extra form on your personal return that you're going to have to do. I mean, the only part that it's going to make potentially more complicated is it could just add more tax that you're having to pay.
Okay. One question here is, can you clarify sales tax? If we pay Scentsy sales tax when we purchase a product and then sell that product to a customer, would the sales tax they pay us just be reimbursing us? Scentsy has already collected it and sent it to the state.
Yeah, so that's where it does get pretty complicated. So the rule is that whoever the end user is paying sales tax. Now, at the point in which you purchase it from Scentsy to go resell it to someone else, in theory, you should be able to provide Scentsy with a resale certificate saying, hey, I'm not really the end user. I'm going to charge this person tax. I'm going to collect it, and I'm going to remit the tax myself. So but I doubt that that's what they're allowing you to do, and that seems like that would be really hard on their business model. So if sales and you can't have double taxation. So I mean, I think that you're probably safe. I don't know what the corporate policy is, honestly. I think you're probably safe if you're paying the sales tax and then you're not charging your customer sales tax. I don't know. You might want to look at your own state law.
And I think that was from Lynn Lowe. I think you're her girl anyway. It
yeah.
says Lynn, so I'm like, I think it's Lynn Lowe, which you're her tax lady. So
yeah, okay. So we'll have to dig into what that means for you and your state and like see the exposure there too. So because it could be, each state is a little different in the way that you report it. So it could be that you're basically recouping the tax then that you had to pay through your monthly or quarterly reporting on their website. We'll look into it.
Awesome. The next one. So she's saying if you use your phone 100% of your business and your bills are around 200, how much that be included when doing taxes? But you can't are people getting it confused? Like if you're calling your mother not Scentsy related, it's not being used 100% of your business then, right?
Yeah. I mean, I think just make sure, I mean, at the end of the day, here's the rule with all of this, right? The pig came out. That's so great. Oh my goodness. Yay. At the end of the day, you're the one that's going to have the documentation to support all of that. So, I mean, like
you use it personal, you use it business, you decide 100% how much you're using for personal, how much you're using for business.
Yeah.
Okay.
Yeah.
And then the 1099 form, again, is something that Scentsy gives us if we make $600 or more in commissions. Is that correct?
Yeah.
Okay, which you can find on your account tab when they upload it by the deadline. I have business internet. Is any of that deductible?
So in general, I put, and this is the way that I do it for myself too, because I work from home, is I use the home office allocation and I just take a percentage of the internet that I use, because I know that that's something that the IRS is kind of like, they're cracking down on, and people have high speed internet because they've got 5 kids sitting around on devices. So I wouldn't be so bold as to take 100% of that unless you're actually like renting out office space and have like dedicated space with its own utilities.
Right. Another one about the PayPal. When people PayPal her money for orders, I have to order for inventory I don't have. How can they tax us for money that's not mine?
Okay, so they're sending you payment and then you're turning around and ordering it.
Yes, immediately. So like I need to order you a warmer and laundry stuff. And so you PayPal me the money and I go to Scentsy and order it immediately.
Okay, then you should be capturing your order when you ordered it through Scentsy, you should capture that cost, and that's going to be your cost of goods sold.
So it basically crosses each other out, like it's Xing each other out.
It doesn't really sit in inventory, especially, and that's going to be an important part too, right? So if this is like a drop ship kind of scenario, so it's like it never really touches down at your house, it just immediately goes to my house. It never would hit inventory. It's just going to go straight, you know, it's immediately going to be an expense.
Okay. Is there a loophole? I know a lot of people are saying, can we send as a birthday gift or whatever to avoid the tax issue? Like, is there a way to put code words to change that up or they don't catch it?
You know, that's kind of yet to be seen. I had seen it was everyone was losing it on this accounting forum that I'm in, and then they realized that they were only doing that for like business accounts right now. They were trying to figure out a way, you know, because they were like, oh my gosh, you know, I sent my mother $1,000. They're going to track that and 1099 it, and I think that was kind of blown out of proportion. I think
okay,
for like business accounts right now.
Okay.
So
but it's good to keep good records of it anyway, of money coming in, coming out, whether no matter how you're accepting payment, just keep track of it because it's still income. But if you're buying the product, it's an expense. Like it's okay. It's not scary.
And I think that I mean they're slow to catch on, but they're catching on to the fact that everyone's just Zelling and Venmoing people nowadays. You know, that's I mean,
convenient.
They're going to find a way to rein that in.
Yeah. I have a question in regards to donations. I donated my commission from one party to a friend's husband's medical expenses. How would I incorporate that into my taxes if she gave her commission?
Yeah, so actually, so you're gonna, if you gave the commission, I mean, that's pretty easy because you have like the actual dollar amount that you gave. If you were to be like donating product, I guess, for example, then you can take the cost of the product, not the sales price, like what you could have sold the product for, right? So that's important. You can't inflate these things. But that's actually it's gonna stay on the non-business side of your personal return. It's gonna go into your itemized deductions. So that gets kind of tricky because you ran that through your business, but it's not, you might not get credit for that expense because the standard deduction is so high. So if you were still taking the standard deduction, then you might not be itemizing at all in that extra donation, and then the work to track the donation is all for nothing.
That makes sense. Is there a percentage of a monthly income that you recommend us to put into a tax account that we set up?
Yeah. So a good formula to use, you got that 15.3% of self-employment tax, and then you also have what your like top tax bracket that you're hitting in is. So that second component of that is really going to vary from person to person, and then you have the added complication of people that have to pay state income tax. So I would say, you know, probably starting off just until you can really figure out what your expenses are in your tax bracket, at least 25%, maybe put that into a savings account just so you're not completely broadsided at the end of the year.
Okay. And yes, we can file quarterly.
Yes.
We can buy
IRS website.
irs.gov/
there's a direct pay and then there's payments.
Okay. / direct pay or / payments. We buy new bundles for samples. We can write that off. Is there a dollar amount of annual income that a consultant receives that they should consider becoming to an LLC? I know you said what, $15,000 a year. Yes. Is that like home income or the amount after write-offs? What do you think?
So I would say the amount after write-offs.
Okay.
Because, and here's why, right? It's going to cost probably, you know, it varies between state, what the state charges you, but like Texas charges us $300. And then if I was filing for someone, I charge another $300 on top of that, right? So you got like $600 to form the business. You're going to have an extra, like, you know, probably incrementally $200 or $300 more to do the annual, you know, that tax return because it's a separate tax return. You're going to have to run payroll for yourself. And, you know, some of these things you can do yourself, but I mean, that's going to run you probably at least $50 a month. So it's like you have some extra costs associated with it. You just have to make sure that you're going to get that savings.
Okay. I also have a full-time job. Can I fill my Scentsy on that tax form as well?
Yes. Yeah.
Okay.
Yeah. You put your W-2 on the top of your tax return, and then you just complete the Schedule C for your Scentsy business.
Okay. Someone did a fundraiser, gave 100% of her commission to Relay for Life. So it's whatever she paid the organization. Just keep track of that amount that you donated and it goes in donations. Is that correct?
Yes, that's going to go on itemized deductions. Special for 2021 is you can add up to, if you're married filing jointly, you can add up to $600 of cash donations, not items, not like goodwill donations, but cash donations you can put in addition to the standard deduction as an adjustment to income on your return.
Okay. The next question is, if you ordered from Scentsy for a customer and the customer paid you back the total, including tax and shipping, how do you log this?
So you ordered, okay. So my concern, we're going to assume that we run the risk of, that the income that you received from that person is being reported, right?
Mm-hmm.
So I guess in this scenario, it's like, they gave you $10 and then they gave you $10, you placed the order, and the $10 covered $10 worth of expenses that you incurred for getting the product.
Right.
Yeah, so it would be income $10 and then cost of goods sold, which would include like shipping and freight for $10. So it would ultimately be a wash. You're just,
and I think it's depending on how they're paying you back, right? So if they're paying by credit card, Scentsy accepts all of our credit card payments. We don't have to do anything. It's if they're giving you cash, check, or paying Venmo, or you need to keep check of that. Maybe if you want to keep a log, create an Excel spreadsheet maybe and keep track of how the payment's coming in if you're worried about it.
Yeah. And it really depends on like the volume that you're doing and how complicated you get. But I would imagine, it could be just as simple as listing out everything you sold in one column and then listing out like the actual product that you then pulled out of your inventory or ordered for them as an expense. So you're tracking the cost kind of side by side, even by customer.
Okay. What about items that you've purchased to raise more money for fundraisers or to donate, or like prizes for a fundraiser? If I want to give to top class, can I write all those off as well?
Yes. So on your tax return, again, that's all going to go under the charitable donations
part
of your itemized deductions.
Perfect.
But you can't put it in the cash donation, the cash contribution section. You have to put it in like the like in kind or like item the non-cash donation section. So you have to put a little bit more information on the description of it and what your cost was and like the date and stuff like that. If it's over like $500.
Okay. We have a Scent and Warmer of the Month subscription that we get every month. It's 8 Scentsy bars, the warmer, flyers, a tester. A lot of times we use a couple of the bars to make samples. We have some to give as hostess gifts, some to sell. So she usually puts half of the bars out for samples. So would she just claim 50% of the cost of that?
Well, so you're going to be technically writing off 100% of the cost. So it sounds like in this instance, it's just whether or not you want to get granular and you want to it sounds like that would be like a dues or subscription, like reoccurring costs that you have. So really at that point, it's just a matter of, are you showing all that in the dues and subscriptions category? Or are you splitting that out between like advertising promotions for saying, so I think bottom line is like, keep your life simple and just stick it in one place.
Okay.
Just like keep it all in dues and subscriptions.
Okay. If I pay an accountant to file my taxes, but it's combined Scentsy and spouse employment, is the filing fee still considered an expense that could be listed?
Yeah, I would. Because I mean, the argument there too is that, my life is more complicated. I had to file this business and, this is how I had to do it. And it just so happened I couldn't file my business without filing my personal too. So.
Okay. Someone says, I'm on SSI. How does this affect me?
Oh, okay. So what your Scentsy income is going to do, similar to, any other kind of income source, is that it might affect the amount of Social Security that you have to pay taxes on, because there's different levels. I think that unless you're making quite a bit of money, that you're probably not going to impact too much your Social Security benefits. But you might see that the box indicating what portion of that was taxable, that might start to go up.
Okay, so when you have a catalog and sample packs, how do you log those? So we're buying the product, which is an expense. And if you're handing it, it doesn't cost you anything. If you mail it, that's a postage expense. So you're just tracking that as business supplies coming in to buy. right?
Yes.
Okay.
Yeah. No double dipping with any of that. Like if you already expensed it off because it was like a dues and subscriptions, like sample pack that you get every month, you can't like take the expense there and then say that you're charging some, that you're taking the cost of goods sold for that same bar that was included in the pack that you already.
Right. Just leave it in one if we have that. Yeah. Okay. Is there a limit to charitable donations?
So that's going to be again like on an individual level. So
Okay.
I think we're still in that provision in which they were allowing people to almost completely offset their income with charitable donations.
Okay.
So, yeah.
Okay. It looks like the last question we have before we wrap up, with keeping up with orders when they pay cash, check, debit card, PayPal, is Scentsy receipts okay to keep up with it? I hope you say yes, because that's how I do mine.
Yeah, absolutely. Yeah.
Yeah. That's one of my methods is I'm old pen and paper. When somebody order something, I fill out an order form and I write the method of payment, but I also am printing off all my monies coming in through PayPal, through Venmo, and I just give that all to Michelle. So she figures it out, but I have the access just to run the reports and give it to her.
Yeah, well, you're very organized. When in doubt, just keep it all. The rule is that after 7 years, you can get rid of all of this extra documentation unless you commit fraud, and then like all bets are off. So
Then you're in deep trouble. Okay, how can people reach out to you if they want to contact you to find out your fees, or if they question, whatever, how can we get your info out there for them if they want to contact you?
Sure. I think the best way is probably email. I know, gosh, I'm so neglectful of my like Facebook Messenger. I'm very bad with that. So I think the best way is my email, which is michelle@michellegrahamcpa.com. And I think Heather, I think you have that one too.
I think so. Michelle at Michelle Graham
CPA.com.
Yeah. .com. It's in the chat, folks. Grab it before it disappears. And
Yeah.
one last question before someone just put it in here really quick so we can just get them before we leave. Hopefully not off topic, but if you're separated for 1 year, but still legally married, can you file head of household since you're technically our head of household?
Yeah. So the rule of thumb is that you had to be living separately for at least 6 months in order to file for head of household. Yeah.
Awesome.
And then, but be careful if you're in a community property state, things could get really complicated with all of that stuff. Like, yeah, just even if you divorced like in November, and then the way that you have to, I'm so sorry, been there, done that.
Yeah. Well, Michelle, thank you so much. You are absolutely wonderful. Every time I listen to this, I feel like I'm just going to do better next year. I'm going to get a jump start. Who am I kidding? I really want to be so organized.
Yeah, I'm gonna make you pull out this recording.
Yeah, you're gonna maybe watch it monthly. Yes. So we're gonna maybe start a monthly, let's put our receipts together at the end of the month Zoom meeting while I drink wine. Maybe we'll do that. I don't know. But thank you so much, Michelle. I really appreciate you taking an hour of your evening with your little ones. I appreciate you very much. Thank you.
Oh, you're welcome. Well, I'm gonna pop off so I can deal with the situation. So
yes, no problem.
You guys have a great evening.
Thank you so much.
Right.
All right, guys. Well, that is it. Thank y'all so much for tuning in on this Thursday night shift. Next week, we are going to dive into Scentsy Club in depth. And I don't know if y'all listened to that training call yesterday that they did. It was phenomenal. I took 4 pages of notes. I highly recommend you go into the training center and watch Superstar Director Emily Goodnett. Listen to what she says. Listen to the keywords. We're going to go over them again next week, but it is so powerful that in 24 hours of listening to her video and training, I already have 2 more people signed up with Club because of listening to her training. So listen to the training on the workstation, grab this collection and get those samples made before it releases to our customers February 14th, because it's going to be a really big seller. I can feel it. All right, guys, y'all have a great night. Thanks for tuning in. Uh-oh, I forgot to record this. Oops. There's not going to be a playback, except only in the monthly movement. I told you I should not be in charge of this. Oh, crap. Okay, well, thanks for joining us. Sorry, Kelly. Bye.